Let's be honest, investing probably isn't the first thing on your mind when you're settling into student life in Germany. You're more likely thinking about navigating weirdly quiet Sundays, figuring out the recycling system, or why you need coins for everything from grocery carts to bathroom doors. But here's the problem. Even as a student, especially as an expat, getting your financial ducks in a row early can make a massive difference down the line. You don't need to be rich to invest. You don't even need to understand every financial term. You just need a bit of strategy, some patience, and the guts to start. So let's make investing in Germany for you as a student less scary and more doable. By the way, if you're new to the channel, my name is Ehsan and I came to Germany as a student in 2015. And on this channel, we discuss how to build wealth as an expat in Germany. The first question you're probably asking is, can students even invest in Germany? Short answer, yes. Longer answer, absolutely. But there are a few catches you need to know. In Germany, there's no rule that says students cannot invest. You can open a brokerage account, buy ETFs, even experiment with stocks. Though we'll talk about why it's probably not the best starting point. But there are bureaucratic traps everywhere. Language barriers, paperwork weirdness, even tax implications that sneak up on you if you're not careful. Also, while you technically can invest as an international student, some platforms will ask you for proof of residency, a German IBAN number, or even a Schufa score, which is Germany's credit rating system. But don't worry, I'll break that all down without putting you to sleep. First thing first, get your financial base sorted. Before we even get into investing, let's get real about the basics. Think of it as your financial hygiene. Weird terminology, I know, but crucial. Open a bank account. If you haven't already, go for a bank like N26 or C24. They are mobile first, have English interface, and don't make you cry at the counter. Track your income and expenses. Apps like Finance Guru or even Excel, if you're old school, help you know what you can realistically invest each month. Have an emergency fund. Before investing anything, set aside 3 to 6 months worth of living expenses. Life in Germany isn't cheap, especially if your laptop breaks or you're unable to get that sweet Ferian job and suddenly you cannot afford your own Wege. Once that's sorted, you're ready to actually think about making your money grow. Let's talk about investing apps and which ones are student-friendly. Not all investment platforms in Germany are equal, especially for non-German speakers. Some are designed like they actively don't want you to use them. Here are 3 you'll want to look into. Trade Republic. Mobile first, great design, low fees, and the interface won't overwhelm you. You can start investing with just €1 with savings plans, also called as Sparpläne. Taxes are handled automatically, and this app is also available in English. Scalable Capital. Similar vibe with a few more bells and whistles if you get into investing more seriously. They offer a flat rate model or a pay per trade. Smart Broker Plus. Similar to the previous two, but with more individual stocks and access to more than 30 trading venues. Okay, now that you have a financial base and know which investing app you would like to use, let's look into the investing part. You've probably heard people talk about stocks, those things that somehow make people rich or broke depending on the day. But what actually is a stock? When you buy a stock, you're buying a small piece of a company. Yep, like owning a tiny slice of that business. And if that company grows and makes money, you get to benefit too. That would mean your stock becomes more valuable. Or the company pays you something called a dividend, which is like a small cash reward for being a part owner. Let's say you really like Microsoft. When you buy Microsoft stock, you're not just supporting the brand, you're actually becoming a small-time owner of that company. Now you might be thinking, alright, how do I even start investing in stocks? There are a couple of ways to go about it. One way is to buy individual stocks. You choose specific companies you believe in and buy individual stocks. It's simple, but if that one company doesn't do well, your money could take a hit. Another way is investing in funds or ETFs. That stands for exchange traded funds, and they work kind of like a big basket filled with lots of different stocks. Instead of buying one company, you're investing in a bunch at once, like Microsoft, Apple, Google, Tesla, and much more. This spreads out your risk. If one company in the mix has a bad day, the others can help balance things out. So your money is not tied to the success of just one business. Germany loves ETFs. The average investor here isn't day trading Tesla stock at 2 a.m. Most people just buy 50 to 200 euros a month into a global ETF and call it a day. That's actually smart. It's a long-term game. Popular ETF types in Germany include MSCI World, MSCI Emerging Markets, FTSE All World, and many others. You can set up a Sparplan or a savings plan to automatically invest a fixed amount each month and forget about it. It's the lazy way to build wealth, and it works. What about taxes? Here's the not so fun part. Germany taxes investment income, but don't panic. If you earn less than 1,000 euros per year in gains, it's tax-free, but only if you submit a Freistellungsauftrag to your broker. That's just a fancy form of telling them not to deduct tax on your gains until you hit the threshold. It's a simple process of giving your investment app your tax number, and it takes less than a minute to set up. And remember, this 1,000 euro is on realized gains. Over the limit, you will pay 25% capital gains tax plus the solidarity surcharge and potentially TERS tax if you're registered with a religious group. Please hit the like button if you're getting value from this video and consider subscribing. Isn't investing risky? Of course it is. So is crossing a German street against a red pedestrian light. Seriously don't. People will glare at you like you just kicked a puppy. But the risk depends on how you invest. Buying random crypto tokens just because some guy on Reddit said it's going to the moon, high risk. Investing small amounts monthly into a globally diversified ETF over the years, historically pretty low risk. A few smart rules. Only invest what you don't need immediately. Don't check your investment account every day or even every week. Don't panic when the market drops. They always do, and they usually recover. Remember, you're playing the long game here. Even small amounts can turn into big amounts later thanks to compounding. Einstein called it the eighth wonder of the world, and I think he probably knew what he was talking about. What if you leave Germany after studying? Great question. If you leave permanently, a few things happen. You keep your brokerage account open in most cases, if the investment app is available in that country as well. You'll need to notify the app provider and possibly deal with cross-border taxation rules depending on your new country. If the app isn't available there, you can use an investment app which is available here in Germany as well as your next country. You can transfer your portfolio to that app while you are here in Germany and inform the new investment app that you'll be moving out of Germany into the next country, where you can still use that app. If you choose an app which does not allow portfolio transfer, or if you do not have any options in your target country to receive your portfolio, in that case, you will have to sell your investments and move the cash into your bank account. From there, you can move it to your home country or the intended country and start investing there. So yeah, before you hop on that post-graduation flight, do a little digging based on your future destination. The last thing you want is a surprise tax bill from two countries at once. Can students invest ethically in Germany? Glad you asked. Germany is actually pretty forward-thinking when it comes to ethical investing. Many ETFs focus on sustainability and avoid fossil fuels, weapons, or other controversial industries. Look for keywords like ESG, SRI, and impact investing. You'll find ESG versions of popular indices like MSCI World ESG that align better with your values, or if you wish to invest in Sharia-compliant companies, you can search for Islamic to find Sharia-compliant ETFs to invest in. You're not too young, too broke, or too confused to invest. Seriously, investing isn't just for finance pros in suits or middle-aged dads with spreadsheets. If you've got just €1, a smartphone, and a little curiosity, you can start. Will it be perfect? Nope. You'll probably overthink your first ETF or forget what a Freistellungsauftrag is halfway through setting it up. That's normal. Investing is like riding a bike. You'll wobble, maybe fall once, but eventually it feels natural. Start slow, stay consistent, ask dumb questions. You don't wait until you know everything. You never really do. Investing isn't about getting rich overnight. It's about making sure the future you doesn't have to stress about money while sipping coffee in some overpriced Berlin cafe. Start now, even if it's just a little. To help you do exactly that, in this video, I share how to invest your first euro in Germany. And in this video, I talk about my scalable capital portfolio. So thanks for watching Black Vision, and I'll see you in one of these videos.